Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade for Thursday, September the 23rd. All right. Without further ado, I usually talk about the economic data, see how that's impacting the overall markets, and finally talk about some option strategies that I'm going to implement into my portfolio based on all of this economic, geopolitical, and market analysis. That's how we come up with our directional assumptions. That's what I'm looking for my option strategies. All right, so let's get on with the economic data. Before we do, make sure you guys subscribe, hit that bell, because that bell will give you a notification when I pop in unannounced. Sometimes I'm going to come in here if I find a trade where I don't have a scheduled time. Today, this afternoon, we're doing a webinar right after the close. Make sure you guys subscribe so you guys get to participate in that and smash that like button. I think of it as, hey, you know what? You're throwing a cookie to one of those bots that runs out there and finds somebody that looks like you to enjoy this video as well. So please make sure you guys are smashing that like button for me. And throughout the video, comment, folks. I want to make sure that this video is pertinent to you. So if you want me to look at something, throw it over there in the comments section. I will be keeping an eye on that and make sure everybody's clear of concept. All right. So without further ado, today is the day I've been talking about for the economic data. It is forward looking. And what we're looking for out of this data point is the PMI number, Purchasing Managers Index. Now you can think of this as the first line in the economic sphere, if you will, because what happens is the purchasing manager sees the demand coming into his manufacturing company or his process, right? So if he sees the manufacturing demand coming out of you and I, he's going to ramp up his purchasing, right? That's why he's the purchasing manager. He purchases the raw goods for the manufacturing company that he's in, based on what he sees as demand. So this is forward-looking, folks. This is one of the best forward-looking data points you can find. And we've got it all across, basically circumventing the globe today, starting with Australia. Their manufacturing PMI, Purchasing Managers Index, keep in mind with this data point, Purchasing Managers Index is the PMI, right? PMI, Purchasing Managers Index. Anything less than 50 is contraction in the economy, all right? And anything greater than 50 is expansion, all right, in the economy. And we look at it from the manufacturing sector to the service sector. Here in the United States, we're more of a service sector, so we're going to pay attention to that number a little bit more. But Australia, we got 57. That's above 50, so we're seeing expansion in the manufacturing sector out of Australia, but the service PMI came in at 44.9, so 45, really well below 50, and they even revised last month's number down, which was below 50 as well, down from 43.9 to 42.9, so 4 ticks off of that. So Australia's struggling a little bit. Let's talk about Europe. Now they talk about their flash PMIs. You know, we're going to wait for our ISM, Institute for Supply Management PMIs. That's really the one we look at here in the United States. We still get our market or flash PMI numbers, gives us a little bit of a heads up as of what our data is going to be. So let's start out with across the pond in Europe, broader European region, manufacturing PMI coming in at 55.2, expected to be, sorry, I forgot to share my screen here for you folks for that PMI stuff. So anything above 50 expansion, anything below 50 is contraction. So Europe, manufacturing PMI, 55.2, expected to be 57. Services sector, 56, right in line with expectations. Now, Germany and France are the main manufacturing sectors of the European region. So those are the ones we're going to look for the manufacturing. Well, German manufacturing PMI, 58.5, folks. It was supposed to be 56.1. Yes, we're seeing expansion. We're going to see expansion across the board in all of these data points. Note, though, they are all coming in lower than what the analysts were expecting. And we're going to look over at the equity markets, and they're making a boom move to the upside. Why? Because of just this. We're getting worse economic data. Equities are going to start spiking. Why? Well, we've just had all these Fed governors talking, right? Yesterday, we talked about this with the FOMC. It was coming out later on in the day. What were they going to do? rates unchanged. I told you folks to look at the statement, what they were talking about going forward. When's that taper going to happen? Well, there's 9 out of 22 that say that the taper is going to happen this year. All right. That is not enough. And this year would have to be basically in November. And I don't think that we're getting ramped up for that yet, folks. It's just the economic data is not there. Unemployment, not where we want it to be. Yeah, we're seeing some inflation. Is it transitory? All of those things are things that would make the Fed raise interest rates. If we saw unemployment coming off, good unemployment, higher inflation, being driven by that higher pricing power from the consumer, all right, not just from the Fed printing money. All of those things are what we're talking about there. So German services PMI 56 expected to be 60. We got the European flash manufacturing for those first two. Sorry, the German manufacturing was 58, lower than expected. France, where's France? Why aren't I seeing France? I don't know. French services PMI 56 in line with expectations. Their 55 was lower than expected on the manufacturing. German lower than expected, but above 50, coming in at 58. The services for Germany coming in at 56, expected to be 60. Broader European region coming in at 58, expected to be 60, and services 56, expected to be 58. All of those missing on that headline number. Yes, it's still showing expansion, but what people are looking at, we're starting to see a little bit more of a slowdown here. We're not accelerating like we would like to see there. Now we move over here to the United States. We got our flash PMIs. Remember, we're going to wait for those ISM, which coming around the corner. Ours coming in for the manufacturing 60.5, expected to be 60.7. Now remember, we are service sector here in the United States. That came in at 54.4, lower than the expected 55. So a little bit of a wet blanket there. Something to talk about. Canada retail sales better than expected. The only reason why I mentioned that is because the last time I talked about Canada's retail sales, they were worse. So got a good reading there out of that. And the CB or the LEI leading economic indicator slightly better than expected at 0.9%, expected to be 0.7. And natural gas storage is in line with expectations there. PMI numbers, like I said, all above 50. We saw that across the board, well, except for over in Australia. But expansion in the economy, well, but we're seeing a little bit less expansion than we were expecting. So I think the markets are going to celebrate that today and start making that move to the upside. Bonds are coming off 1.5 right now. A lot of these folks talking about, well, we're going to talk about the taper, and we are talking about the taper and when it might come in. Well, like I said, only 9 out of 22 folks voted to taper. All right. That's not going to probably get the majority of a taper vote by the end of November when we come back around for these folks to vote again. All right. I don't think it's going to happen. I think they're going to be talking about this happening in 2022. One voting member said that they weren't even going to raise interest rates in 2022, and that would happen in 2023. Now, we don't know exactly who voted that way, but it is something to really give yourself a bit of perspective as to what the media is throwing out there and what we are actually seeing from these FOMC members. If 9 out of 22 are voting for a taper or thinking about a taper, I just don't think you're going to get the majority swing on that one for a real taper, which is why we're seeing some of those bonds coming off a little bit here today. And then we've got gold futures here coming off again today. It's a bit of a surprise to me as inflation's there. I would think that we would see some upward momentum here in gold. You guys know I sold some puts in GDXJ, the junior gold miners, and playing this to the upside. We're seeing volatility come out of some of those, so that's not hurting me. The directional move versus the volatility coming out at the same time are pretty much offsetting here. Now, Bitcoin is below the Fibonacci here right now. I was talking about 44,000 was going to be that kind of line in the sand, that psychological level. Some folks are calling for it to break 40,000 as it's gotten downgraded by a couple of other people. Biden coming out and saying that he is going to have a crypto critic, which is basically a way for the government to regulate the cryptocurrencies. That's been a bit of a headwind right now on the cryptocurrencies because she is a bit of a wet blanket for cryptocurrency, to be quite honest. She has talked about it as an asset class in disparaging ways in the past. So Bitcoin could see some headwinds here for the next year as this woman comes in and really tries to understand why everybody is loving cryptocurrency. I don't think has a full grasp on it at this point. VIX coming off here as we are seeing the markets make a move to the upside. You can see the NASDAQ is back above the 50-day simple moving average. That is going to be a win for most people looking at this market in the equities. But I'm looking at this as a head and shoulders. I drew in that neckline right here because we are building it out. Remember, yesterday we were talking about, if you missed yesterday's presentation, we were talking about how we were setting up for a head and shoulders here, breaking below the 50-day simple moving average. A lot of folks were going to be talking about that, but I talked about the market finding some support here on our Fibonacci extension, the 138 Fibonacci extension. Well, we did come down very close to that, but here's our neckline that I kind of drew in here. We've got a shoulder build out here, the head here. Now we're starting to build out another shoulder. If we break below this neckline, that is usually where we're going to see that whoosh to the downside if we get it. Now, if we break above the top of that head there, that is breaking this pattern. The head and shoulders is completely out. But if we start seeing this roll over, keep your eyes on the dotted line there. That is where our neckline is. A break below that has created that head and shoulders pattern there. That's showing up everywhere pretty much other than in, I think, the Dow Jones at this point. So we can go over to the Dow Jones. Not a real good head and shoulders setup here. I don't even know what you would call it, to be quite honest. It's going right back to the point of control. Now, I've talked about this throughout all of this. I think that if we are starting to see a bit of a slowdown here, the tech sector has had a nice big run. I think that what we will see is some of that rotation out of tech and into some of these blue chip stocks. If we start to see a bit of a slowdown, not due to the Delta variant necessarily, but just due to the economic market or the economy slowing down, I guess is the best way to enunciate that. But the Dow Jones coming right back to the point of control is not a surprise at all. We talk about this all the time in these spotting the trades, is that it is a magnet. The market is going to want to go back there as it is where the market has found value. E-mini S&Ps, it does have a neckline. It is very negative neckline. I usually like to see those at a little bit slighter upward move. But again, that's what we're going to be looking for this head and shoulders pattern that we've got set up or working on setting up. We got the shoulder, the head, and building out another shoulder. Maybe look for it to test this. Again, if we break above that headline, that is breaking this pattern altogether. If we come up, test this trend channel and start rolling back over, watch for it in that neckline, because that could be where you get the whoosh back down to the point of control, which would be a target if we start seeing that weakness there in the E-mini S&Ps there. Now you can see from the breakdown of the chart here, I'm not quite sure what gets me back to even here, the pin or that. I feel like I got to hit everything 100 times. Economic data, that's that wet blanket economic data we got this morning on those PMI numbers. What did the market do? We spiked to the upside. And I talked about this. We will probably see more momentum to the upside if we get bad economic data right now. Why? Because everybody's talking about good economic data, rising interest rates, Fed cutting the taper. All of those things are headwinds for the equities. You throw that out the window, maybe easier monetary policy will get the equities a boost to the upside. Well, that's what the market is calling for right now, is that they are not going to start raising rates. They're probably not even going to raise or taper at the end of the year. So the equities are making that move to the upside. The latter part of this year, we're going to be looking at a situation where we are looking at bad economic data, and that is a positive for the market. And ultimately, it goes back to the fact that the interest rates will remain low. All right. All right, something I want to talk about with Pfizer. Some folks upgrading Pfizer. Some sales ideas got released here a little bit, and some people talking about a lot of the things with Pfizer and the vaccine, right? So the vaccine's obviously going to increase their overall revenues, right? If everybody's getting a vaccine, they're one of the more popular ones. Well, folks, that's going to increase their revenues quite dramatically. Well, what are some of the side effects that we have seen with the vaccine and or even this particular virus in general? We're seeing a lot of blood clotting going on, and some other, what was the other word I was looking for? I think I took a note for it. I'm gonna have to find my note. What was it? Shoot. The cardiomyopathy. There we go. It only took a minute to go through this old brain to find that. Cardiomyopathy, they have a drug there in Vindequil. I should have written all this stuff down. Vindequil or something like that. Anyway, that cardiomyopathy increasing during this virus, well, they sell a drug to counteract that. Those revenues up 77%. Blood clots in the lungs, other places. Eliquis is a blood clotting drug. That's up 13%. So all of these ancillary drugs that Pfizer has already had are starting to boost overall revenues. I don't think a lot of folks are talking about that right now, but keep in mind, Pfizer has ancillary drugs for some of the negative effects due to COVID, whether it's the drugs you're taking, the vaccine, or actually getting the virus. Side effects, these are the drugs that are going to try and counteract those, and they are also by Pfizer. So Pfizer, to me, is upside risk, okay, especially coming into the earnings season. I think that we're going to see Pfizer start talking about some of these data points and the overall revenues just going through the roof. Bank of America, folks, this trade has kind of gone into the dumps here. I was actually really looking forward to this trade starting to work out quite nicely. We've been in this trade for a little while now. Lowering overall cost basis, staying mechanical with it. If you guys remember, was back in, what was it, September? Actually, it was back here in September, end of July, very end of July, right around in here, we started getting these topping patterns in here, and I was playing this for a long-term bearish trade, and we did it by using the put diagonal. I did a webinar on it and talked about those rules in and around what we would want for a diagonal like this, and part of it has to do with setting up our strategy around the earnings for that underlying, and we can see here that we've got earnings just around the corner, and we should expect volatility to start going higher, which is what I was expecting to have happen. I was not expecting this volatility crush in the same month that we were getting the earnings in. So it is what it is, but we got involved in this trade on the bearish move here, looking at doing the put diagonal. So I go in and I'm looking at the October, buying the 43 puts here, okay? And then I sold the August 36 puts in here. And this is in Bank of America, sold the 36 puts in August, all right? So I'm looking for a bearish move here on this diagonal. And I did this for a total credit of $5.27 for the entire trade. So on the puts that I bought, obviously they were more expensive, $5.70, and these were like 43 cents when I did them. All right, I rolled out of the October 36 puts for I think it was around 6 cents. All right, so lowered my overall cost basis on this trade by about 37 cents overall. And then I had sold another 36 put, but these were in the these were in the August. These were in the August, not the October. And then I went into the September. These are the August because it was a diagonal, right? We did the August, and then got out of the August and got into the September. And I collected another 34 cents for that. So lowering the overall cost basis on this. And then this was all on, these two were on the 6th of August. And then on the August 27th, I covered the 36 puts in here for 6 cents, I think, 7 cents, sorry. So for 7 cents, so lowered that by another 27 cents on cost basis there. So just trying to lower overall cost basis. Also got the directional move here finally after covering those 36 puts, those long 36 puts. Got the volatility spiking here right in and around there. I didn't cover this trade. It wasn't quite to a winner. It was still a loser because of all the theta decay that's happened over this time. It's eroded those premiums. So I was trying to squeeze it out a little bit more. Thought we'd get a little bit more of a whoosh to the downside, and we didn't. We got the big snap back yesterday to the upside, and was hoping for a little bit more follow through back down to the this point of control here today. But you can see the whoosh to the upside. This trade's obviously not working out right now, especially because I am, long the October 43 puts now outright, and that volatility crush coming out, and I'm in the month that has all the theta decay. This trade is probably going to end up being a full boat loser in here. I'll probably at this point write it through the earnings, because if it's almost worthless at this point, I might as well just go through the overall earnings with it to try and get some money back in that. It's almost worthless at this point. So I'm just going to let it ride unless we start getting a real big pullback down to that point of control, and I can start covering it for a small loss before that earnings. Then that'll work. Otherwise, I'll let that just ride at this point. It's just taking a snapback today, and all the levers and pulleys working against me in this one here. All right, so Bank of America. I wanted to also talk about American Airlines here. Right at this point of control, a lot of headwinds going on. Maybe lockdowns, passports, all of these things, but it's been stuck in a ring for quite some time. Volatility is really low. We've got an earnings in this next month. So I'm going to try and play this with a long iron butterfly. And I'm going to talk about the levers and pulleys about this trade in the webinar today after the close. So make sure you folks are hitting that subscribe button and on that bell, because that bell will give you the indication when we're popping in here. Smash the like button. If you guys had any takeaways whatsoever, please smash that like button when you get that takeaway, because that will send the bot out to find somebody to share that information with as well. All right, so American Airlines, I am going to play this for a trade on the long iron condor today in the webinar. For earnings though, stick around. I'm going to try and pop in here later on today and talk about earnings for Nike and Costco. I think I'm going to stay away from Nike, because of the whole Taiwan thing. There's a lot of supply chain issues, workers, all of that stuff. I just don't want to deal with it. They could come out and say anything. I think that the demand is there. My kids are buying the Air Force Ones, all of that stuff. They have to have it. They're paying over retail for it. So I do think that Nike is probably going to say that there's the demand out there, but I just don't know if they're going to be able to say that they can supply enough shoes for that demand. So I'm going to stay away from Nike, but Costco, I am playing to the upside. I'll get long Costco, folks. It's just a madhouse in there every time I walk in there. So I think they're going to come out with better than expected earnings again, and I'll be happy to get long Costco if they stick it to me and drop down. So I'm going to play Costco to the upside for an earnings. Stay away from that Nike trade for that earnings, and I'll be talking about how to set up American Airlines for a pop or a drop. That's what we're looking at right now for the webinars, is a pop or a drop. We don't always know which direction it's going to be. It could. There's some headwinds out there. There's some tailwinds. Which one is going to win? I'll talk about how we can set up that trade to take advantage of either one of those scenarios, whatever thesis you have. Okay, that's it. Smash the like button before you go. Comment if you're watching this on tape delay. I will circle back around. And finally, subscribe and hit that bell. If you can't take that, take it easy. Bye for now.